What's up everybody? Tom here with another video. In today's video, we'll be discussing everything to do with the market pullbacks that are occurring right now and whether we need to be concerned or whether we think there's better months to come. We always expected that August or September were going to be weak, and we obviously saw this weakness play out. What's in store for the rest of October, November into December? Are we going to have a great year? Stay tuned to find out more. All right, guys, before we revisit that chart and have a quick talk about what's going on in the markets right now, I just want to talk about the closure here for the markets close the 11th of October, 2021. And here's a heat map of the S&P 500. And when we're taking a look at this chart, you'll notice that many sectors were down. And while this was a lower volume day, specifically some big things happened. We had a hit on financials, surprising considering the US 10-year, and we'll look at that a little bit later. We also saw Tesla continue to really show that strength when the rest of the market is not showing it. But what it was all about was Wall Street playing the manipulation game. Remember, lower volume, we saw that initial rally into the retail hour of power. And as we've been talking about with the close, we came in, we saw the weakness through the day, and the closure really put that gap in place. We fully filled the gap that we expected to fill last week. It's happened. Now do we see that further weakness? So the bear's about to take full control. We've got some big bearish candles, look-likes on the S&P 500, Nasdaq, and of course Dow Jones. All of them not looking very strong. Let's go look through the sectors here. We have XLP, XLK, XLU, all the sectors were down. Nothing really was that strong, except for I would say that overall we had some decent movement in XLB and XLE in the morning. So that's the energy sector and the materials sector. Both look good and then came back down with the rest of the market. I still think the materials sector could be a bit of a sleeper. While everyone's eyes are on energy, materials is starting to form its base, and that's something that we'll continue to look at throughout the next couple of weeks. So we brought up this chart at the beginning of the video. We were talking about this quite a few months ago. We're talking about that post-election year. Generally around this period, you start to talk about tax, and that's what forces that August period down. But let's say we pushed it forward 1 month, or pushed it back in this case. So what's happened is we go August. So what happened in August happened in September. Then what happened in September happens in October. And then, of course, we see those strong months into the end of the year with the good gains. This is pretty similar to what I think we're going to have happen here. A lot of people think that this is the big crash and things are going to get really bad in the markets. And while I do think that we're potentially going down further here, and we'll talk about the levels very soon, we are at a point where it's unlikely that the market will want to go for a full crash. Now, you can totally disagree with me, but we've got some key levels to break through before any of that occurs, and we'll take a look at those now. So let's have a look at the SPY here to get started. And the SPY, the S&P 500, it was weak. Rejected our trend line on the way down. First rejection, big sell-off. Non-farm payrolls day, obviously all around and everything. And then we've filled that gap with another big sell-off. So what is the real story here? Well, we have these rejection style candles. We've seen early rallies that have been belted by Wall Street into the close. And we know that the close is the key here. What Wall Street does into the closing position tends to lead very heavily into the next session. And it also tends to lead very heavily into the overall sentiment. If we're belting down, that's what we're really looking at happening. The SPX is the same thing, but I did want to bring up the weekly here because this is a serious deal. We've had rejection week, rejection week, rejection week, typical of buying markets. This is the weekly. 4,300 has been purchased once off, twice off, 3 times off. So if the market is to come back down and close underneath this, it's a significant close, and it really opens up the next key level, which is that 4,100, 4,050 level. If we closed a weekly underneath here, from a technical perspective, the next logical conclusion is the 50 exponential moving average. And we've talked about this quite a lot on the channel. If you go back through time, you look at the weekly 50 exponential moving average, you'll see that it often keeps those deeper pullbacks in check. So if you're a person that believes this is just a correction and an opportunity, wow, this could be a zone that you bring your system in and you start to think about, well, what am I looking at should it occur? Let's now have a look at a 2-hour chart because I want to really look here at the current gap close and where we're at. So we closed the market at a key point of support, which was previous resistance. Resistance, resistance, resistance becomes support. Why do we close here? Because it's the most logical point of fight between the bulls and the bears. It's what we were discussing last week. It's where everything happens towards the next zone. Should we bounce like this and then we break off these two rejection wicks? Well, we're clearly going bullish. I think not many people could really be bearish in the market at that point. You're starting to really talk about very strong repair, putting pressure on that 44.90 level on the S&P 500, and it's just a lot of bullishness in the market. So we will be watching this section through the next open. But if we're able to get underneath 43.60, where's the next logical conclusion? To put pressure on the 4300. And if we put pressure down here, we've got 1 touch, 2 touches, 3 touches. Usually the 4th touch does not bode well. The 4th touch historically has been one of those ones that has a higher chance of breaking the support or the resistance. Remember, 4th touch, it's just not a lucky number when it comes to touching a support or a resistance. So we get back down here, we put pressure down on that point. Next logical conclusion is 4200. Conclusion after that would be around that 4050. So do the options agree with this? Well, we've discussed these option call walls, and if you're a new time subscriber or a new time viewer of the channel, please consider following us because you may enjoy this type of stuff. So we have here the 450, what we call the call wall on the SPY. And effectively, this is a point that we do not expect the market to be able to close against this week. And we've always talked about this zone, and we've always, ever since pretty much the beginning of September, because it was very unlikely that the market would want to be above this come October 15th. It was always going to hold it back. Now, in the last 24 hours of trade, we have seen a little bit of a random zone here come through as a bit of a put wall. Currently, most of the shorters, most of the people going for the bearish side, they seem to be buying up that 400 strike put wall. So we've got a lot of room in here this week, and I want to see another day of trade to see whether we see like a 420 or a 430 come through as a heavy put buying area, because we do have a lot of puts, a lot of smattering of puts on this very important Thursday expiration. And I think a lot of that's going to come in ahead of the news. So remember, Monday was Columbus Day in America. It's a very low trade day in comparison to what we're usually going to see. We have big news such as the FOMC meeting minutes. We've got CPI, we've got PPI, heaps of information coming out. And I think we'll get a very clear picture come tomorrow's close in terms of what is going to happen this week from our ranging and what we expect. When we go out and push it to November, you'll also notice that it's all over the place. This is more like a traditional month in advance where the market is heavily bearish in terms of there's way more puts open than calls. And again, this leans into what we usually start to see in the markets, which is a stronger overall put base or put walls. And these tend to lead to markets that actually are recovering or going up. If you look at any normal open interest by strike, there will always usually be tons of puts open and a lot less calls on the SPY because these are used to hedge off. So in this case, if you go to November, it looks really weak on paper, but actually in many ways, these levels such as the 400 level, such as the 430 level here, will end up come November becoming very key zones of basically buying pressure or buying support. We'll continue to watch this, but that's the way we look at it. In terms of where Wall Street currently would want to close the market should they make the most amount of money, that would be at 438. This is what we call the maximum pain chart. I don't know if that will actually happen this week, but 438 on the SPY would be the absolute perfect point for Wall Street to close the positions. Let's move over now to Tesla and talk about what's going on there. So another day, another missed opportunity at breaking through the 800 level. This 800 level is a serious deal. We've had 1 breach fail to close, 2 breaches fail to close, 3 breaches, and even 4 breaches fail to close. Now, why this is important is because it shows us as traders that you really should be always thinking about the closure is the key. So, I mean, if you accidentally bought here or accidentally bought here or accidentally bought here, you might be stuck in a position that's down. It's really important you practice scaling. It's really important you think about the price action. And if it does close through 800, we expect some pretty big ramping here on Tesla. Basically, we have a series of higher lows. We have a very nice pattern coming in currently and it is looking strong in comparison to the rest of the market, which is looking weak. But until you get above 800, you're not really showing that next level of participation. And once it gets past 800, you can see why we've got that 880 marked out, because it's very clear that it ramped last time and there's a good chance that it'll go for it again. So pending the market still stays relatively healthy, that is the Nasdaq and the S&P, this market is certainly looking a lot better. Tesla has strong back of the end properties. Its seasonality into November is usually quite good. So I'm optimistic here, but you cannot ignore, 760 support or the longer term trend line. Keep watching them, guys, and 800 is going to be one of the trigger points that I think a lot of people will be looking for. Now, we always talk about Tesla's options as well here on the channel, and it's crazy how many people have been shorting it recently, going for that bearish pressure. You'll notice this 700 strike, a very popular strike with bears at the moment to try to pressure Tesla down. It's not working, and it's pretty traditional. This gives us a bit of a wall in terms of we do not expect the market to ever be under that by, let's say, the Fridays of the week, and we've seen this very consistently in terms of recent pressure. We also have this $800 price target in terms of calls. Now, you might think, oh, well, this is a wall that the market can't get through. It can't get through it, but remember, with price action, should a market be coiling in advance of a very, very key, let's say, call wall, which is $800, and then it closes above, what that is basically letting it through to the keeper. At that point, you get this market momentum, you get this absolute fever, the FOMO hits maximum. If you go and look over the internet websites such as Wall Street Bets, such as StockTwits, Hype Equity, all these types of ones, what you're going to see is the increased amount of chatter on a stock like Tesla will go insane. The amount of people opening calls will go crazy, and really it starts to ramp up heavily. So remember, it's all about the price action first, and we use these put call walls to help us really figure out ranges, and should ranges break, let us interpret those markets. Let's now have a look at Apple. Apple had another pretty weak day here, rallied in the morning, took out new highs, and then of course fully shot back down. Many people call this a pin bar or shooting star rejection style candles. Realistically, it is a weakness candle. It's consistent with what we're seeing in the indices, which makes sense because Apple's such a big part of them. And now we're still looking for that 142 to be closed below, because if it closes below 142, back down to the lows here and possibly back into that 135 range, our longer term trend line. And all of this would be consistent with what we'll talk about in the Nasdaq in just a few seconds. So let's look at the call put wall here again. Very even. We have the red line and the green line basically showing that there's a lot of puts and calls all over this 145 and 155 range. And there's not a huge amount of shorts in the market either. So look, a little bit lackluster on the options put call walls at the start of this week, but we should still keep following them. At the moment, we can't make any real definitive answers other than to say, okay, we're not expecting a huge bullish week on Apple at this point. Let's move over to US oil, as many people are discussing this. We've got the long leg doji here on the 4 hour and a little bit of weakness coming through. We have seen oil kind of go up in big, ramps and then pull back fairly aggressively. 50 exponential moving average has been picked up once, picked up twice. So it makes logical sense should we have a pullback for it to pick back up. That's around $78. Our longer term expectation here on something like US oil is actually for it to still ramp into around 86, but it could be a little bit volatile coming into such a thing. So people think 86 is ridiculous. I always say to people, go and check the longer term timeframes, and you'll find that oil has been as high as 145, 146 a barrel. That was ridiculous. And this is probably more of a fair value. Somewhere around this 65 to 85 is actually probably pretty fair value currently for oil in the markets, although it may not seem so when you fill up your cars. Let's go over to US 10-year. This is probably the thing that most people are looking at. The more this ramps, the more downward pressure will happen on the Nasdaq. And that's what we're starting to see in the market. Weakness in the market due to the 10-year, due to rising concerns about inflation, Evergrande, debt ceiling this, everything else. So there's a lot of reasons to be bearish in the market, but really I think this is one of the big key ones. And it's more of a instant concern than a long-term concern. Remember, as long as the US 10-year stays under 2%, it's unlikely to really cause severe pain in the markets. We have seen that ramp. We've discussed it here on the channel for quite a few days. It's been a fantastic little trade if you've been in it, or if you've been looking at it towards weakness and giving you sentiment. And we expect 1.7 to be the next logical conclusion for it, then 1.75, and after that, 1.95. And you might say, well, why 1.95? Because when we go out to the weekly, what you'll notice is that right on that 1.95 was the previous November highs and the support. So this is a very logical, longer term, kind of medium term approach to it. And if that does happen, expect the Nasdaq to actually find some weakness here, and for us to see that initial maybe push down to some key zones. When you've got US 10-year going up, you usually have TLT, or the 20-year bonds, going down. So they're just really correlating together with each other. We're about to see bonds hit support around 140.51. People that are interested in TLT, this is that area where some buyers may come back in. But yeah, if you believe the US 10-year is going to go higher and higher and higher, TLT could be a bit of a dangerous play towards the buy side. Let's move over to the Nasdaq now. So not only has the Nasdaq closed the gap, everyone, but it's done so in pretty ferocious style. We saw it come back up, hit the 20 moving average, reject. Then it comes back up again and then sells off. And then it comes back up again through the Monday session and sells off, creating another bearish style candle. Now, should you snap off 15,000 at this point, and if you're a bull in the market, oh boy, you're hoping for that. Big deal. Big deal. You're taking out shorters that are here, shorters that are here, a 15K level, and the 20-50 moving average. Surely at that point, and even the trend line down, at that point, you're basically saying, okay, we're bullish in this market. We've created the lightning bolt, the trough, the peak, the higher trough, the higher peak. A very solid scenario for the Nasdaq. But as we stand here at this point, this looks mostly bearish. And I'd love to know what you guys are. You bullish or bearish? Let us know in the comments down below. I'm super interested to see what the community thinks at the moment. So while we're going into our glorious trend line here, and that could be where we pick off, if we close underneath the trend line, 200 SMA, the 200 daily, 14,050 previous resistances, it makes logical sense that this is the next trap zone. And that's where I think a lot of buyers will have a crack at the market. I would have a suspicion that Wall Street is floating around this zone, floating around that 4,100, 4,050 on the S&P 500. Again, it makes sense to what they would try to do. We move over here to the QQQ. It's the same thing. Obviously, just the exact same thing, but just the ETF version of it. So when we're talking about what's going on here in the markets, if we close and we keep moving down, we get underneath 358, we move towards that 340 zone. So 340 will be a key level, and we want to look for that 200 daily SMA. That's going to be one of the ones that I think a lot of people will be watching on this chart. It's pretty exciting times should we get a dip like that. We'll move over to BTC. So BTC, whether you want to believe it or not, is running incredibly well. The rest of the crypto market is not coming with it, which is traditional. This is basically what happens. Bitcoin goes first, the king goes first, then it consolidates, then Ethereum comes through, then we get the rest of the altcoins coming through, the big ones, and then of course the speculation ensues. So this is similar to most other big Bitcoin runs. Huge run here off the 40,000. We move all the way up to 57,000, and it's just doing some great breakouts right now. We've got, of course, breaking above these previous rejection candles. You can see one here, two shooting stars, very large rejection candles. And all of a sudden, this thing's looking towards that 60,000 goal that we had for it. So yeah, looks strong. What do you guys think for Bitcoin? What's the calls for the end of the year now, guys? Let me know in the comments as well. Very interested to see what people think of BTC. I tend to think it might go with a little bit more strength, start to consolidate, and then that money will flow out of this and into the other coins. And as long as it can consolidate and hold around the area, that's traditionally what we do see. So big news for the week ahead. We've got CPI, core CPI coming out Wednesday, 8:30 a.m. New York time. Then we have the FOMC meeting minutes coming out 2 p.m. And of course, this is going to be a big one here. FOMC meeting minutes, nothing to sneeze at. So we'll see what they have to say. And then we've got PPI Thursday, 8:30 a.m. Again, another big bit of news for the US. And core retail sales and retail sales, 8:30 a.m. Friday. So it is a jam-packed week of lots of little bits of red news. We expect to see some volatility. We expect to also see markets move incredibly quick both ways. Fear is, of course, rising in the market, which means we need to be quick and we need to be fast. And remember, don't let Wall Street get the free lobster lunch on you. So that's what we don't want. We don't want to give them no lobster lunch. Be nimble, be fast in the markets right now, guys. It's certainly an index style market. You look at the stocks, they don't look that great on the charts. I'm sure many of you are looking at them going, man, some of these stocks don't look that great. There's a reason for it. And what we're looking for now is some consolidation and some clear signals from Wall Street, from the market, that we want to go bullish again. We are optimists here on the channel. It pays to be an optimist. However, we are in a correction at this point. So we need to be very careful. And I wish each and every one of you the best of luck. Thanks so much. Remember to subscribe if you enjoy the videos and smash that like button. It does help us out. Bye for now.